Good morning, traders. It is Tuesday, June the 11th. Taking a look at the charts, we've got the SP 500 futures, the daily chart here. And you can see we've had this very strong run. Last week was the strongest rally, a 1 week rally in the SP 500 for the year. So very strong move. We're flirting up with this previous pivot high here. Yesterday it pushed up, ended up closing below it. Today we are trying to push up again in pre-market. Now the market loves to use outside regular trading hours, so pre and post market hours, to try and bridge above or below resistance and support. So this is what can very much happen more often than not is the market will try and gap above resistance. In pre-market, it can move itself very easily, and then when the big selling steps in, it can sell back down and reverse. So we'll see how today goes. Yesterday, I talked about in the video that we are in a setup very similar looking and feeling to this over here. We are right into more or less these highs. We're flirting in this potential range where it could do a box base and take off, or it could create this consolidation and continue to go lower. So we'll see where today goes. It's trying to push higher, and we talked about how the trend is shifting from a downtrend, which are red bars. This is the 30-minute chart here, and now we're going to orange bars, which means it's gone more or less neutral. It's starting to try to move itself to the upside. More or less, we've got a downward bias, a cycle in the charts here for a few trading sessions. So we could see this market roll over. Now, with that being said, if it does break out, the downward cycle here actually flips and extends to the upside, and you get a much stronger move to the upside. This down cycle just completely inverts, and you get all that momentum that was supposed to go down to the upside. So that's where we are. We're at resistance. The market's flirting there. Yesterday it gapped up and held most of the gap from the closing price. It did fade down into the top, so I usually consider that to be more or less a gap fill. But there was a gap there. Today we're set to gap higher. Right up here at this red hashtag, pretty much in pre-market trading, which is an overbought market territory. So the fact that we've had this strong run and we're kind of gapping higher and then gapping higher, I do feel as though we're going to see some selling step back in and pull the market down. It's a little overextended on a short-term basis. At this point in pre-market, it is at an overbought level, and we could start to see a pullback going forward from here. And if we do, that might send some money into precious metals. And we are seeing metals move. Gold's relatively flat. Silver's up a little bit. If we take a look at silver, let's go to the daily chart of silver here. Here is silver. Or sorry, gold. Gold is down a little bit. It's had this nice pop, but more or less it's forming a little bit of a consolidation here. Like we talked about last week, we could see this consolidate for a week or two, but if the stock market does roll over and start to head lower, we're going to see money flow into the safe havens. We're going to see gold hold up more of a sideways pattern here than a pullback. Same with miners. If we take a look at the gold miners, GDXJ, big gap down yesterday. We got out right up here near the high for a portion of our position. We hold the rest of our position. We're starting to get a lot of moving averages consolidating here. We got the 50, the 200, the 20-day. They're all coming together. The price is above it, so we could find a very significant support level through here as well over the next couple days. But overall, miners are trading a little bit lower this morning. They are recovering actually in the last half an hour or so, but again, we're going to probably see metals and miners trade sideways and hold up if the stock market rolls over, and eventually they should continue to move higher. Looking over at, let's take a look over at energies real quick. Natural gas, trying to find a bottom. I feel as though it's somewhere like over here where it's trying to work itself through a bottom here. We're finally trading through the 5-day moving average in pre-market. We'll see if it can hold. Overall, we're looking for some type of bottoming formation, and we are anticipating some type of potential bounce in natural gas. Once it can find a bottom here, we are expecting a potential bounce up to the 245. It has the potential to work itself up to around the 255, 260 area. Overall, it is making a series of lower highs. It's making a series of lower lows. and it's just continuing to kind of work itself out. I do feel as though if it has a bounce here or consolidation, it still could very much so be just that. A consolidation means we will head lower later, and we could get down to this $2 mark, which is way down there on the chart, and could be a screaming opportunity later this summer. Looking over at crude oil here, up 1.8%. It's trying to form a nice little bottom here. It's looks like it might have had a washout low yesterday, chopping around, pushed up some new highs, sold back down, and it's consolidating right here. We'll see what kind of formation this forms, but it's starting to look like a little bull flag. If we were to probably go to an intraday chart, go to say a 30-minute chart. Let me just put in 30 here. If we go to a 30-minute chart and zoom out, we can get a feel for the type of price action. So you can see we've come down, had a little consolidation, another big drop. It's kind of worked itself up. It broke this previous pivot high just by a few ticks. It's pulling back. I would say on an intraday basis, this actually looks pretty bearish. I'm not a fan of I call it like a broken arm. It doesn't bounce, and it's not rounding up to the upside. It's just kind of like a limb just hanging there. More or less, we got a sharp move down. We've got a limb hanging here as it drifts up into this kind of upper resistance area, the breakdown area of this chart, and then it could easily continue to go back down and test potentially this low. If it breaks that one, it could go down a little bit lower to the next level, which will be somewhere right down around this area here. So we'll see how that goes. Overall, it's trying to form a bottoming formation, but on a short-term basis, it still looks a little bearish to me. And if it can start to break this and hold this pattern to the upside, then I think it will have reversed and it could be easily moved back up to the 27, potentially 28 area going forward. But short-term basis looks a little bearish. You could argue there's a neckline right here. You've got a little bit of a shoulder. You've got a head. You've got this broken limb shoulder. If we break this support trend line, then we're probably going back down to this lower end around $52 per barrel. Taking a look over at bonds real quick, money is flowing out of bonds. Nothing significant. Yesterday it was a pretty big drop. Once it loads here. Yesterday we saw bonds the previous session trade higher, and then yesterday gap down, pretty strong drop, and we're flirting with this low here along here. We'll see if bonds can hold up, but we talked about this several times. Again, we are in one of these areas here where we've had a nice strong run to new highs, then it consolidates for a few months, pushes to new highs, consolidates for a few months, pushes to new highs. It could very easily consolidate for a few months here, but overall the trend remains to the upside, and it's making higher highs and higher lows. So overall, I think at worst, we're looking at some type of pullback and consolidation before it starts to just go higher again. Looking over at the US dollar, US dollar is trading up this morning a little bit. Again, the dollar here is flirting with this support channel. The big question is it going to hold, or is it going to start to break down? And this is the channel it's been oscillating in. It is trying to find some traction. If it starts to break down, this could be the start of a very big precious metals rally. If we do see it go back up, we're going to see precious metals consolidate for probably another month or so before they try taking another breakout run to test some highs. So that's where we are in terms of the dollar. And if we take a quick look over at Bitcoin, Bitcoin still forming this bearish formation. To me, this looks really bearish. Again, the downside target here, if we do a Fibonacci extension, we can go from the high down to this low, up to this recent high here, carry it forward. It gives us an idea of where the downside target will be for Bitcoin. Here's the sell-off, here's the rebound, and here's the downside target, 1644-ish, that area. And this is a bear flag. Even if we just look at just this red bar, this is a big down red bar. These are more or less all inside days, meaning price is trading inside this red bar. That is a bearish sign, and eventually we should see selling step back in, and whatever this distance is for this red bar is where the top will be, is the distance you can measure the next downside move. So we've got a couple different levels here. More or less this drop from the current price would bring us around to the 618, which happens to be pretty much these lows over here. If we go full sell off based off the all-time high and the low and the high here, then we are going all the way down to the 1644. So you can see where we are in terms of two price targets. Pretty clear on the chart based on measure moves, based on previous open and closing prices, and based on price gaps. The market loves to move in these very measured ways. It may look random to most people, but these are very specific, and the market does seem to stick to these rules because they act as support levels when above. When broken, they create big waves of selling, and it'll drop to the next support level. Just like an apartment building, you've got floors and ceilings. If you break through one floor, you're going to fall down usually to the next floor before you bounce. So that's where we are in terms of those markets. Anyways, that's it for now. I'll talk to you in a little bit. Bye-bye.